Hello and welcome to Doing Business in Rwanda. I'm Samantha Loring. Now this week we're exploring Rwanda's financial sector. Despite the country being considered one of the least developed on the continent, it's also one of the fastest growing, boasting average annual economic growth of 7%. Now this has allowed the financial sector to thrive amid improved fiscal policies and more stringent regulation. CNBC Africa's Irene Burungi-Mugisha takes a closer look at the current state of the sector and efforts made by government to achieve a stable and sustainable economy.
High inflation has continued to plague the East African community, with countries like Kenya, Tanzania, Uganda and Burundi all recording double-digit growth between December 2010 and December 2012 on the back of the high oil and food prices. But Rwanda seems to be bucking the trend. Over the past 3 years, the country has maintained its inflation rate at moderate levels below 6.5%, mainly due to good harvests, a relatively stable currency, and coordinated government policies to mitigate inflationary pressures.
Really, what has contributed greatest is macroeconomic stability and the conducive business environment. The conducive business environment really allows people to come and invest in an environment that is more attractive. But the macroeconomic stability is a prerequisite for any investment that comes to this country. And that's why the economy has been growing really, if you look at the last 5 years, on average by 8.2%, even including last year. Last year, even despite the problems that we've had, especially with the donor disbursement being delayed, it showed that Rwanda was really resilient.
Mainly it's a new sector, it's young, and we've been having new players coming in. And as they come in with new products, and this helps to increase competitiveness within the sector, but also innovation. But also we put in place proper legal and regulatory framework that facilitates this growth.
The financial sector has played a key role in rebuilding the economy since the end of the Civil War. Sound macroeconomic and structural policies like the Financial Sector Development Program and the Economic Development and Poverty Reduction Plan have established a comprehensive policy framework and a detailed action plan for developing the sector backed by the substantial donor assistance.
Increasing access to financial services has been one of the biggest, and we've seen investments in new banks. And here I really must say that one of the areas we've seen intra-African investments has been the financial sector, where over the last, maybe I would say 6 years, we've had EcoBank come into Rwanda, we have KCB, we have Equity Bank, now we have I&M from Kenya, all regional African banks. And I think the financial sector probably tells best the story of how African firms are investing within Africa, which is a very good and welcome phenomenon.
We also saw the private sector, foreign direct investments also coming in strongly. It has been growing, but last year it increased by 50%. We saw the diaspora resources coming in strongly, this time increasing to 175 million US dollars. We saw the tourism increasing by 12% to 282 million US dollars. So all these are responding to the conducive environment that we see. And we saw our banking sector increasing significantly to that. The credit private sector increased by 34.9%, almost 34%. So this was by 33.9%, sorry, close to 34%. This is quite significant by any standards.
We look at the profitability of the different institutions, and we also look at how your portfolio is performing within the portfolio. I mean the loan book you have as a bank. So how are they performing in terms of the health of the portfolio, non-performing loans, but also in terms of how your portfolio is diversified to different sectors and how these sectors are working. So we avoid an institution to overrely on one sector that could crash with the institution. So we have these different measures, and with this we have a clear regulatory framework in place that we put minimum requirements for each financial institution that you need to meet to ensure the health of the institution. We also follow up issues of governance, and we have to make sure that these are governed as corporates, not as private business. Yeah, so that helps to ensure stability and growth of this financial sector.
Rwanda's franc is market-driven, and the central bank only intervenes on the domestic foreign exchange market by selling foreign exchange to banks in order to stabilize the local currency.
If you look historically for the last almost 10 years, our currency has been quite stable. It's market-driven, but it has been stable all the way through, and that has helped, because once it is stable, then it allows even investors to make long-term decisions, because this time they know that the currency is well maintained. And up to now, there is a very significant cushion of reserves to make sure it can keep it more stable for quite some time.
The country's Vision 2020 plans to build a middle-income status country by promoting investor confidence and ensuring that all factors remain constant. Driven by this vision, government is regulating market cash flows by keeping inflation levels stable.
The 8% average growth that Rwanda has experienced actually has been one of the highest in the world. And in fact, the IMF projects that Rwanda will grow 9th fastest this year in the world. But for that to happen and for us to achieve that, the financial sector has had a very big role in financing development. Even for the private sector, a robust financial sector that has available resources and funds that the private sector needs is very critical. And so the development we've seen and the growth we've seen, and the one that we want to see going forward, is going to very much go along with how quickly and how faster the financial sector can grow, because the financial sector will be able to raise financing that is required for this. Without an equivalent growth or even more growth in the financial sector, you can't expect this, the growth of other sectors to happen.
The GDP of Rwanda has been doing well, I would say, over the past 10 years. Till 2012, had an average growth of GDP in general of about 8.2%. And that translates into GDP per capita growth of around almost 5.8% growth. And this has seen GDP per capita increasing from about 204 in 2002 to $644 in 2012. And of course, as you know, our target for 2020 is 1,240. And we have confidence, based on what we see in the medium-term plans of our EDPRS, that we will be able to achieve that GDP per capita.
The support the government has offered in terms of policy changes, reforms that need to be implemented, whether policy or law or even practices in some cases, to ensure that that thinking is supported. I know in some cases government has also gone ahead to provide what I call hand-holding services. You're not able to move from one point. What do you need? Is it a business plan that we can put together, that can help you put together? Is it a consultancy? Is it access to a certain technology that you're lacking, that we can help you show where you can get it?
Government is also promoting domestic savings as a prerequisite to provide long-term savings to the banks, who in turn lend to long-term investors. This means the availability of resources and cost of those resources affects the lending rate set by the banks.
Rather than just programs, we included skills development for productivity, whether it is agriculture productivity, whether it's non-agriculture or off-farm jobs to be created, especially with a focus on youth employment. That way, if we develop the skills across the board in all the sectors, it's going to have a significant contribution in the implementation of the programs within the rural development and also for economic transformation.
The more Rwandans we bring in the circuit, in the financial sector, the more the financial sector is able to mobilize savings, to mobilize deposits, and to do business anyway, because they have many people coming to the financial sector. But also has another advantage, that the more Rwandans we have in the net, in the financial sector, the more advantages they have to use these financial services to improve their livelihoods.
The financial sector has gone a long way in transforming itself in terms of diversifying their risk. If you look at the majority of the banks' books, their balance sheets have, good chunk of it in investment portfolio, in the long-term financing mechanisms, arrangements, which speaks to the fact that there is a bit of development outside in the market that you see that is supported by the extension of the credit to the long-term projects. That's on the business side. On the individual side, you'd see, on the retail market, you'd see that majority of the banks now do mortgages, which, again, on the business side, supports the real estate development businesses.
Despite the impact of the global financial crisis, Rwanda is on a strong growth path that has primarily been driven by good harvests, an increase in exports, largely due to rising commodity prices and high domestic demand, supported by expanding credit to the private sector.
Now, a lot of these people are people trading. We also do have people who are in farming. Which again are sectors that the typical banking products under corporate and retail would not be able to fully address the needs of those clients in those sectors. So definitely there is a clear indication that more people are being able to access financial services due to the fact that micro-lending now is something that is being seen as a means to being able to empower these people.
The quality of the loan portfolio, what we do, for example, we work with a scorecard system. That's a system that, based on let's say, historical data, we are able to analyze credit applications very fast and very accurate. And of course, we monitor the portfolio very well, so to ensure that we have a good loan book, and that will help let's say, future growth of our providing financial services to the people in rural areas, SMEs and others.
You, for example, hear of low savings capacity, you hear of banks not being able to extend long-term credit, in excess of 15 years. You hear also them not even having the capacity to undertake on big projects, for example, those that require huge amounts of money. All that stems from the structure of the economy, and that I wouldn't say there's anybody to blame it on, because we are a young economy, we're growing.
The banking sector has made significant progress in expanding its services to a large portion of the population that was previously unbanked. This has helped broaden lending and borrowing levels, encouraging an entrepreneurship-driven economy.
The number of people now accessing formal financial services had increased. And that's obviously because of some of the initiatives like what Bank of Kigali is doing in terms of micro-lending. So definitely that has, those initiatives have helped to bring in a lot of more people into the banking space or access to financial services.
The non-performing loans have reduced from 8.5% to 6.1%, which is a good, progress. Yeah, that's one of the impact of the Credit Reference Bureau, and many people are accessing credit because of the availability of the credit information and the credit information sharing.
In terms of the growth, what you see is that the country is undergoing a strong economic growth. If you see the growth percentage in Rwanda, and if you compare that to global average, you see that Rwanda is doing remarkably well.
We're taking a short break now. When we return, we're taking a look at interbanking transactions and how Rwanda can leverage on regional integration.